All right, what's going on, everyone? Welcome back to the Wall Street Rundown, the show where we break down the biggest shaping the markets, economy, everything that's moving the money in this market. I'm your co-host Billy. I got Wale with me. What's going on, Wale?
What's good, everyone?
Man, let's start with this job market, man. Again, I can tell you something is brewing under the hood. Nobody, I don't think nobody believes when I say that. I was like, every single time they provide a number, it get revised even lower and lower and lower. So the U.S. economy has lost about 92,000 jobs in February. That is probably one of the biggest slowdown in hiring that we have seen in a while. You know what I mean? And at the same time, unemployment gonna tick up to 4.4%. So we creeping up. All of these uh, conditions are starting to align for a possible downtrend in the market. Add the war on top of that, like we have seen the stock market are doing some crazy stuff so far. Even though with the drop we had today, we still haven't really cracked that level I was thinking about. But again, this $92,000, 92,000 jobs lost in February. That's a lot of jobs, man. So, Wale, man, let's talk about this, man. Like, what does that mean for the economy? What does that mean just in general for the stock market?
Yeah, I think for me, what I have sort of have come to the consensus of is that the economy is not doing as well as people are saying, right? And it is wrong to use the stock market as a gauge for the economy, right?
Mhm.
When you're talking about the economy, you're talking about people, right?
Mhm.
You're not just talking about a concentration of businesses and what their performance has been over the last couple of months. Couple of things that we're seeing: higher unemployment,
Yep.
slow job growth, sticky inflation, higher credit card debt balances. And they said that record number of people have taken hardship withdrawals from their 401ks. So there are cracks under the surface, right?
Yeah.
I think right now that we have to figure out how bad do the cracks get. And that I think we have still yet to see. Um, Again, I'm not, how should I put it? The optimism that I had going into 2026 in certain sectors of the market, not all, but certain sectors of the market, starting to wane because the story is starting to change. The
Yes.
story is really, really starting to change now. And how that looks at the end of the day, we don't know yet. I think there's still a lot of stuff to uncover. But from an economic standpoint, in my personal opinion, I really think that things are really starting to slow down. They're
Yep.
really starting to slow down. And this is when, as an investor, right, this is when you should have a list of, okay, if things get ugly and we see a extended sell-off, what companies do I want to look to buy for the long term? And this is when I would start making that list if you haven't done so already. Because
Yep.
I really think that we will test that 200-day moving average on SPY at some point. I think that that's the way I've been looking at it, man.
Yep.
And
Yep.
just keep making these lower lows and lower highs on the higher time frames. It's not a good omen if you are bullish. Let me just put it to you that way.
Yep. And I think we talked a little bit about it on Wednesday's episodes. Like I don't think we out of the woods yet.
No.
The market gonna have like a couple of days of like maybe bullish moves, but like I was telling you guys, like we haven't really gone anywhere. We're still trading within the range for the past month. We haven't even since January. We haven't really got anywhere. We just trading in ranges. So again, uh, that gives you an opportunity to kind of keep an eye on the market. There's a lot of opportunities gonna come up. But as an investor right now, I think we said this before, you might be able to do two things: either sit on cash or start dollar cost averaging. You
Yep.
know what I mean? And keep waiting to see exactly when buyers are going to step in big time. Even after we have a crazy drop or a few drops, we might see a lot of consolidation before we start seeing move to the either direction, whether it's to be higher or to be lower. So again, I think we're getting close to like those 200 EMAs on a lot of those stocks, especially the ETF like SPY, QQQ, and all that stuff. We're getting really, really close to that. It's probably going to take us maybe another week or so, or maybe over the weekend we might see a gap down. I don't know. we haven't talked about the war. You know, that's still going. Like we still gotta consider that. So you never know. Maybe over the weekend we might see a crazy gap down to the downside. So I'm gonna be keeping an eye on futures for sure. Come Sunday to see exactly where we're gonna be at. Right.
Yeah,
So again, it's there's a lot of variables that's happening right now in the stock market. You know what I mean? VIX, I saw the VIX today. VIX was like up like 29 or something like that today. I was like,
yeah.
whoa,
We
we broke
close.
that high from like October 2025. Like that's crazy.
Yeah,
You
we
know,
yeah, we I'm looking at the VIX right now.
like 29. I think we closed at 29.48 or something like that.
Yeah, 29.48. The high of the VIX last year, the VIX got pretty high in April. The VIX went to 50.
Yep.
Yeah, went to 50. But we had a couple spikes. This was on October 17th. We had a
Yep.
spike to about 28. We
Hmm.
had another spike in November to about 28, and we broke that today.
Yep.
So,
And this is not a liquidity sweep because if you look at that candle, that's a big bullish candle for when it comes to VIX. You know what I mean? It didn't come back, it didn't break through to come down. That's not a liquidity sweep. That is, I wouldn't be surprised to see a gap up Monday because that's a lot of buyers stepping in to buy VIX, you know? So we might be seeing some gap up coming come Monday or Sunday night when the market opens.
yeah, I am not liking what I'm seeing right now on the surface. I'm not. And again, I was fairly optimistic about stuff going in, but this is the thing as investors is as the narrative changes and as the fundamentals change and the data changes, you have to adjust your thinking.
Adapt.
So now, does that mean that the opportunities are going to be dead forever? No. It just means that you have to change how you want to start approaching, you know, these
Yeah.
opportunities moving forward. So, yeah, what I like I said in the last episode on Wednesday, I don't know how to play this war. Like, there's no book, there's no strategy for unexpected news like this. Now, I
Nope.
will be saying this: a lot of people on Wall Street are saying that this is going to be temporary. This is going to be temporary. This is going to be temporary. I don't want to fall into that assumption bucket, me personally. I just don't. Just based on what I know and based on what I've seen, this is not something that I want to sit here and say, I'm a, I think that this is something that's just only going to last a couple days.
Yeah.
So,
Yeah.
yeah,
And
this is,
this is different too from I guess the other wars we talked about. This is
hmm
actually affecting the market. Like it's literally is affecting the market. The other
yeah,
ones we see maybe like a day or two, and then we go back and uh,
correct.
you know,
Yeah,
everything is okay. But this one is actually it's here to stay,
yeah,
and it's scaring a lot of investors. So again, just be cautious with this type of market. The sector that's moving right now is the oil. I know that's in our next topic. Go look at USO. That thing gapped up 2, 3 days in a row, I think. Like that is some ridiculous move. And you might be feeling it in your pocket. I mean, if you go to your local gas station now, you see gas prices are up there. You know what I mean? And this is all because, Iran is one of the biggest holders when it comes to oil and all this stuff. So when you disrupt that movement of oil, you disrupt those, free goods moving through that Hormuz, whatever canal they have, it's causing a ripple effect throughout everywhere else. So again, man, like the only sector that I see like moving really, really good right now is the oil sector.
yeah,
Everything else, I mean, it's moving, but it's not moving crazy. Like even when it comes to oil, I think it's like only USO because if you look at XOM, it's not doing anything. What is the other one? Exxon. What is Exxon doing? Oh, XOM is Exxon. Like a lot of those other oil ones are not doing as well. But USO is kind of like moving. I wonder why though. Oh, it's the
yeah,
United States Oil Fund. Okay.
yeah. So the USO to me is more tied into the price of oil. XLE, XOM, those are tied to the actual companies, right?
Mhm. Mhm.
So to me, in this situation, you want to trade something that's more closely tied to the commodity itself. So if you're
Yep.
not trading futures, right? So light sweet crude, which is backslash CL on Thinkorswim, that thing shot up to what, 92.61 today, and we had been hovering around 54, $60, right, over the last couple of months. I mean, if I just go to a 1 year chart and look at crude has been coming down since August of 2025. It went
Mhm.
from about 60. We hit a bottom around 54. We stayed there for a while, but the last 3 months, that thing has gone pretty much parabolic.
Yep.
If you're going to be bullish on anything, I'd probably say oil is the one thing to be bullish on, and then also natural gas.
Yep.
So if you don't trade natural gas futures, another alternative you can trade is UNG. That is a natural gas fund that you can trade. Um, I think those prices go up because as long as there's a supply constraint in that area of the world, there's a lot of countries that aren't going to be getting energy, right?
Yep.
Because China gets energy from there, Japan gets energy from there. I think they said the U.S. is allowing India to buy Russian oil now, so
Mhm.
they're loosening those things. I mean, that one small area is so important to the global supply of oil. 20% of the world's oil moves through that Strait of Hormuz.
Yep.
And right now, companies are saying, okay, it's probably too dangerous to because Iran's shooting at ships and you have to preserve life. You don't want to put employees in danger because you want to move oil.
Right.
It might
Yep.
be too dangerous, even though the U.S. is saying that they're going to protect people and all that stuff. They might have a limited capacity of what they can do. So, I mean, I've heard some estimates, and people are saying we could see $150 a barrel oil within the next couple of weeks. So if I see a pullback in USO, I might have to ride that thing. I might have to ride that thing because the way I'm seeing, the way I'm looking at right now, I don't see anything that's going to stop it from moving at this point. So,
Yep.
and then Shane said in the chat box, yeah, not good swing trading market. No, it's not. It is not a good
Absolutely not.
swing trading market. Now, I will say this though, with a 30 VIX, look for companies that you want to buy and hold long term.
Long
I
term.
will say that because, and I don't think 30 is where we're going to stop. We might get to 35, we might get to 40 because we don't know how much this thing will escalate. But dollar cost average and look for good opportunities for good companies that when the dust settles, oil prices don't have anything to do with what their business is, right? So think about that.
Yep. Yep. That's a fact. That's a fact. Because now it's like the fundamentals of those businesses haven't changed. You know,
Correct.
it's just the situation we're in right now is giving you opportunity to jump in. That's how you make money in the stock market. It's like
Correct.
when things are going bad and you can do your own analysis and see exactly how this market is affecting your
Yeah.
stock that you're looking at, then you jump in. Speaking of stocks, go look at Oklo, man. Oklo has finally broken to that $60, and I think opportunity is loading up here too. So
Yep.
I'm gonna
I,
keep an eye on that for
I will
sure.
I will also say this with the way the market is trading, people are going to be looking for more quality companies and defensive
Yes.
companies. So speculative companies like Oklo aren't probably going to do too well.
Yep.
Small cap companies may not do too well. You also have to understand that oil is not just used for energy. Plastics, right? Oil is used, I mean, it's used for a lot of
Yeah.
stuff. Petroleum jelly. There's a lot of stuff that oil is needed for, right?
Hmm.
So there's a lot of businesses that could be affected. One sector that did really bad is, the airlines and the cruises. Why? Because their cost of fuel has gone up.
Yep.
That eats into their margins.
Yep.
So if oil stays elevated, some of these company margins are going to start compressing a little bit.
Yep.
So that's probably, I don't know if I want to be tied to a business or be investing in a business who needs oil or needs, jet fuel and things like that.
Yep.
Those types of businesses, I mean, it might be a tough time for them. Now, if you're talking about 4, 5, 6, 7 years from now, will they recover? Maybe. But right now, at least for the next couple of quarters, they might have a tough time if things stay elevated the way they are right now. So
Absolutely. And also on top of that, I mean, I think temporary, we might, like you said, we might see those pressures coming in. You know what I mean? But in the long term, I think we'll be okay. It's just like you have to be able to. Man, I feel like we talked about this like right around this time last year too, right before Liberation Day. And I know we keep mentioning it. It's like you're gonna get this crazy pressure from all the sides of the market. And it's gonna be where the people who really understand how this thing moves, opportunity is actually loading up and they're
Hmm.
starting to buy on the other side. You know what I mean? You might hear a lot of scariness. You might hear, oh, the stock market is falling off. And I keep telling you guys that last, I was like, when you start seeing those headlines, you know it's time to start looking at stock that you want to buy. Because
Hmm.
in no way Wall Street gonna warn you, but like stock market is falling down. And no way those investors in those TV shows are gonna tell you like, oh, it's time for you to sell all that stuff. Nope, they're all gonna scare you. They're all gonna, you know, trying to get you out of your position, and all this time they're buying from you. So again, being patient in this time right now is very, very
It's
critical.
key. It's key.
Yeah.
Yeah, it's key. I put I'm 100% there as well. Is that you don't want to sit here and think that you can time the bottom, or you don't want to sit here and think that you can outsmart the market. You just want to wait until you get a little bit more clarity as far as what the situation is
Hmm.
concerned.
Hmm.
So, if I'm an investor, another alternative, that is not a bad idea is start just building a cash position.
There you go.
Start building a cash position because, like I said, there is no playbook for global conflict, especially when you don't know how long things can
I
last.
know you're gonna last.
Yeah.
Yeah.
So,
Yeah. Well, with that being said, man, let's move on to BlackRock, man. We talked about this maybe a couple of weeks ago when it comes to private credit and stuff. BlackRock has put limits on withdrawals. If you guys want to know what that means, so basically, BlackRock's, you know, they run about $26 billion in private credit fund lends money. They lend money to companies basically, not banks, right? What's happening right now is they're putting limits on how much these companies can get out, right? Because all of a sudden everybody wants their money at the same time. You know, if you think about like a bank ran down, that's exactly what it means. When people go to the bank, it was like, we want our money, we want it right now. Because on paper, the bank technically should have your money, but guess what? They don't have your money. They investing it, they're putting it into other places. It's not sitting in a safe, basically.
no.
I hope you guys know that your money's not sitting there waiting for you. It's being used for something else for the bank to make money and make interest on it, basically. So what's happening right now, BlackRock is like too many people are requesting money to be paid back to them, requesting their cash, basically. So they put limits on that, right? So that way that the bank doesn't run down, they don't run out of money, basically, that's sitting there in their reserve. So let's talk a little bit about that, Wale, because I know we talked about this. Something is brewing under the hood, but it's like we don't know when that's actually gonna fall off.
So, right now, at least for what a lot of people are pointing to, is that the private credit issue it's a non-systemic issue. And I'll go into a little bit more detail about what I mean by that. So basically, investors wanted 9.3% of shares that they tried to redeem from BlackRock's private credit fund. BlackRock said, we're only going to give you 5%. So there's a
Mhm.
difference of 4.3% that they did not allow investors to get a hold of. Private credit is a very illiquid market, and investors know this. But I don't know all the details behind what the redemption rules are behind that. But basically, what we've seen now is that this is the second company after Blue Owl that did not allow investors to get access to their money.
Mhm.
Some people are also saying that. So the thing with illiquid assets, this is another thing. You don't look you can't see what the value is of your money on a day-to-day basis. Not even on a week-to-week basis. Not even on a sometimes not even on a month-to-month basis. So some people are saying that the market price of what some of these private credit funds are showing may not be accurate. And the thing with private investments is there aren't really a lot of regulation and rules around how often you have to show the value. Like when an ETF, if I buy an ETF, I can see from every single second of the day what that ETF is worth. If I buy a mutual fund, when the mutual fund closes for the day and does its, calculations, I can see what that value is the next day. Private credit doesn't work like that. So you don't really know what the value is of the underlying funds.
Mhm.
They're also supposed to be paying you a high amount of interest as well.
Yeah.
So I don't know how this is all going to play out. I will say that there's a lot of pensions um, and retirement plans, possibly not DC, but maybe some big DB plans that are exposed to this market, and we're seeing cracks. This is not BlackRock's one of is the biggest money manager in the world. They're the biggest money manager in the world. They are now starting to crack down. Blue Owl, Ares, go look at Jeffrey's stock. A lot of these private credit players, they are getting absolutely crushed. I think Jeffrey's was down like what 12% today. I saw Western Alliance Bank was down like 10% today. So a lot of these players in this market are are showing signs of weakness when you look at the stock price. But
Yep.
what people are saying is that this is not a systemic issue. So a systemic issue is an issue where you cannot diversify out of it. So think about COVID. That was a systemic issue. You cannot diversify out of that. Think of the financial crisis in 2008, 2009. That was a systemic issue. You cannot diversify out of that.
Mhm.
People are saying that this is just a private credit issue. If this turns out to not be a systemic, if this turns out to be not be isolated incidences and it actually is a systemic issue, I would be really worried. I would be really worried. Um, the fact that BlackRock, which is the biggest money manager in the world,
Right.
is kind of on the hook. I'm a little bit worried. Now, there are other big money managers that I don't think play in this market. Like I don't think Vanguard plays in this market. I don't think Fidelity plays in this market. They're also big money managers too. They're also private companies, so they don't have stocks on the market. But if I'm looking at BlackRock stock right now, let me just go to the chart right here. Yeah, we saw a big drop today. BlackRock was down 7% today on that news. And based on
Jeez.
the chart that I'm looking at, BlackRock may not be done. I could see this hitting somewhere between 897 and 860
Yep.
because we just broke it tried to hold the 200, it broke that, it gapped down below the 400.
Yep.
Yeah, I could see this hitting 197, 86 to 860 area before it finds buyers. But I'm a little bit worried about the news that came out of BlackRock today. Um, because I know that they're a player in that space, and I just don't know how much exposure they have. I really don't know. But
That's going to be very, very interesting to watch
yeah,
how it unfolds over the next couple of weeks because
yep,
um, we'll see who else is going to follow with the redemption stuff and it's going to stop redemption. I think if it start like domino all the way down, probably going
yeah.
to see a lot of those happening.
So I am, I am not pleased with that news.
That's why I say, man, like there's so much pressure in on this market to bring the market down. So much pressure. Eventually, it's gonna have to give up, and yeah, we're probably gonna see again. For me, like when the market's on a downward trend, like you have to change your brain to like, oh my God, the market is crashing. I need to take my money out. No, for me, it's like, oh, the market is crashing. I need to see where I can buy some more stuff. You know what I mean?
Hmm.
Where I can find or position myself. So having that mental change or that, you know, slight change in how your perspective when it comes to the market, that's the biggest game changer you can ever have. Don't let this news scare you. This is actually a good opportunity to start looking for some good companies right now.
Yeah,
You know. But yeah, let's move on to the final segment, man. I know we wanted to keep this short, but man, the Oracle and OpenAI scaled back on data centers to build out in Texas. I gotta have an idea why this stops. it's freaking expensive, right? That's the biggest thing. But then again, I always say this, power. You cannot build those data centers if you don't have enough power to run on them. So it might not be cool because those companies don't have money or they're running out of money. It's just like if they build it now, they don't have any source to be able to plug it up and get it going. You know what I mean?
Mhm.
Like they might have to shell out even more money for to keep it going, or they might build it and have to sit there until they can figure out what to do with the power. In my opinion, if anything that's gonna come with data center slowdown and all this stuff, it's always gonna attribute back to power infrastructure, and how they can actually optimize that and be able to kind of get it up and running. That's my take on why those things might be slowing down a little bit. So let's hear your take on this, man, because I'm very curious.
Yeah, so I think I will say that the original plan that they had is still intact, but I think they had some expansion plans that they had to scale
Mhm.
back on. And the reason for that, I think you nailed it on the head. It might be because of power. Oracle is one of the companies that in this whole AI build out, I'm a little bit not as optimistic about them because of
Yep.
how much money they had to raise in the debt market
Yep.
just to finance some of these projects.
Yep. Yep.
Meta, Google, Microsoft, they are bigger cash cows. They have more Teflon balance sheets. I'm not really worried about them and their build out as well. I did say this though, when it comes to the AI build out, I would rather want to be on the supply side rather than the hyperscaler side. Like I want to be with the people that are going to be getting money from these companies during
Yep.
this build out. So that's where I would want to be personally. Speaking of that, BRT just got added to the S&P 500
Yes, sir.
today. And I think the stock was up like 5% in the after hours. So that's where I would want to be at if I am a investor. But Oracle reports earnings next week as well. And we know that since they had that one big move that one time when they made all those big promises, and then since then it's kind of just faded away.
Fade away. Big time.
I will be surprised what they say on their earnings report because the biggest scare that people have when it comes to this AI build out is companies that have to raise a lot of debt to do it because it's going to eat into the margins and it's going to eat into eat into their balance sheet.
Yep.
Those type of companies I would be a little bit worried about. Right now Oracle is, I mean, they're not at their 52-week low, they're sitting at 152. Last year they traded to a low of what, 118.86.
Yep.
But yeah, I am not sure what to make of Oracle personally at this point. We'll see what they say on the earnings call, but I don't want to pass any judgment on them just yet. We'll just have to wait and see what they say.
Based on this chart, it doesn't look good for them.
Yeah, I'm a little bit I'm a little bit um I wouldn't say nervous, but this is not a company that I can get behind just yet. I just
No,
can't.
no.
I can't. Not
Yeah.
now. So we'll see if anything changes with the earnings report. But
Yeah.
yeah,
It's,
we'll
it's,
see.
it's, I mean, like you said, like investors, when they start seeing you taking money or raising money outside of your company, like it kind of brings some things to question too. Like, so what's happening? Is it too
Hmm.
expensive? Do you guys not have enough money? What's happening?
Yeah.
So it will
So
be interesting to see what they're gonna say.
and I'm pretty sure someone's going to ask that question on the call. Like, why did y'all why did y'all end the agreement?
Yeah.
What's the reason for that? So,
Yeah. 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 All right. With that being said, man, again, economic calendar for next week. I think we talked about this on Wednesday. We have the CPI on Wednesday, March 11th. And then we have another initial jobless claim on Thursday. And then we have the GDP and the PCE all on Friday, March 13th next week. And the job openings. There's a lot of stuff going on Friday. And in addition to that, we got a war going on, fellas. Like don't forget about that.
so
We
this
have
is
other stuff happening.
this is one thing I will say about oil prices and inflation is
Mm,
that higher oil prices. Now, remember, CPI is backwards looking. So we probably won't see the the spike in CPI
yep.
until next month
Next month.
because
Yep.
we're in March. We're going to get March reading in April. So
Yep.
it's backwards looking. Oil prices affect CPI. It does not affect PCE because PCE does not include energy in the
Yeah.
reading because it's too volatile. Now, does that mean that the Fed is going to completely ignore that? I doubt it. But oil prices are not going to cause a spike in the PCE reading, but it probably will cause a spike in the CPI reading.
Yeah.
Now,
Yeah.
here's the thing. The market reacts to CPI and
Right.
PCE,
Right.
even though the Fed only looks at PCE when it comes to adjusting interest rates. With a weak jobs number, does that move the Fed to start cutting sooner if Kevin Warsh can convince the committee that that's what needs to be done? We'll just have to wait and see how this all plays out.
Yeah. I just
We'll
see.
have to wait. But yeah, this is going to be a very interesting month, in my opinion, because lots of variables, lots of uncertainty. Um, and what I will say is Warren Buffett might be looking like a genius sitting in all that cash right now.
My boy is still chilling. He is still chilling.
Yeah, Shane said Buffett bought Oxy at the right time. Yeah, I think he's been in Occidental for quite some time.
Yeah.
So, and I know they're still sitting on a couple $1 billion in cash.
Mm-hmm.
So,
You
the
know.
bond market, let's look at the bond market. So, yields were down today. I'm looking at TLT on the long end, so that's the 20-year treasury. Um, but right now, the data for spreads is not out yet, but I'm looking at the low quality bond reading. We're still above 9.44 basis points. So we hit a high of 9.57, went down to 9.42. Now we're at 9.44. I've been hedging my long portfolio personally. Anything above 9.5 is when I start getting a little bit antsy. Just looking for cheap puts to buy in case we see a big drop in the overall. Because I hedged IoT, didn't need to, but I did.
Mm.
But yeah, I just this is a time where to me you sometimes you might need to play a little defense. You might need to play a little defense. And if you can, you know, be fine. But these things don't last forever. I will say that. But at the same time, we don't know how long they will last,
You know
especially
what
when
it's
it
gonna
comes
be?
to something like this. Last year, the tariff thing, that was you could that's like an on and off switch, right? This is global conflict with a country that you don't have control over and that doesn't like you.
Yep.
So, how the US and Iran iron this stuff out, we don't know. We just have to wait and see.
Yep. That is a fact. With that being said, man, we definitely covered a lot today. But again, it's a reminder, like what I said, volatility might create like uncertainties and stuff, but it also create opportunities.
Correct.
So you just gotta keep an eye on it, you know. Um,
Volatility creates short-term uncertainty, but long-term opportunity.
yep, there you
I should
go.
put I should put that on a t-shirt.
Put that on a t-shirt and sell it. But yo, if you guys enjoyed these breakdowns, again, like we always say, make sure you guys follow and share the Wall Street Rundown so you never miss an episode. Make sure you talk to the peoples, let them know that we always here giving games, giving gems to you all. And again, thank you for everyone who always follows us, always jump on. We hope that we always providing some good, valuable information to you guys. And as always, my name is Billy Clement. I got Wale with me. You guys stay sharp, disciplined, and we'll see you guys on the next rundown. You guys have a good weekend.